The auto sector contributes to about half of India's manufacturing output, and the green mobility transition will have implications on much of it. It's not surprising that some of the auto sector leaders have taken the task head-on to continue to lead from the front. One of these well-known leaders, not just nationally, but also internationally, is Mahindra & Mahindra. We are extremely grateful to the Managing Director and CEO of Mahindra & Mahindra, Dr. Anish Shah, for gracing us with his presence here. May I now invite on stage Dr. Anish Shah, Managing Director and CEO of Mahindra & Mahindra, and Mr. Hormazd Sorabjee to conduct this fireside chat.
Thanks once again, MCCIA and all the stakeholders for having us address this audience. It's been quite an exciting 2 days, and I have Mr. Anish Shah. Actually needs no introduction, man who is steering the Mahindra Group. Obviously, sustainability is a very core to the group's ethos. And, Mr. Shah, just kicking off, we know global warming is real, CO2 levels are rising. In fact, even the government has made a pledge to cut about 1 billion tons of CO2 by 2030. Just looking at it from, let's say, corporate India and corporates rising to this challenge, obviously there is a cost to it. I mean, I think that's really one of the biggest challenges. Going green, clean is always expensive, and that's really the balance. So, how does, let's say, a corporate like Mahindra & Mahindra, or generally corporate India, rise to this challenge? Just keeping in mind that in the end you do have certain shareholders, stakeholders to answer to when it comes to bottom lines.
So, Hormazd, you've raised a very important question, and to me, it's really about purpose. What does the company stand for? So for us, the sustainability journey started 15 years ago, not more recently. And it stemmed from the fact that the Mahindra Group has always led with purpose. Our RISE philosophy talks about driving positive change in communities to enable them to rise. And that's been the ethos behind our sustainability journey as well. And I've always believed, and we've seen across the group over the years, that purpose will drive profits. So while shareholder returns are extremely important, and that is something that we as professionals do have to deliver, what we've seen is that purpose will pave the path to driving those profits. Now let me be more specific about some of the things we've done. When we started this about 15 years ago, we started this because we saw the world becoming warmer. At this point, we've actually got to a 1 degree warmer, and at 1.5, we're going to see a lot more problems. We've started seeing a lot of natural calamities, again, because of climate warming, more in the recent past. But 15 years ago, that was not the case. But at the same time, at that point, we started looking at how do we conserve energy, what are the actions we take to become water positive, because it's not just about being carbon neutral. That's one aspect of it. For us, it has always been about planet positive. And planet positive includes carbon, includes water, includes waste to landfill. And over the last 15 years, we've done literally 2,000 projects. And those projects today have put us in a position where we've saved 74% of the energy we used at that point in time. We are zero waste to landfill on 17 of 21 sites that we have for manufacturing. And we are water positive as a group. So those things we've already gotten to. Now we've laid out a path for where we go from here. And we've laid out 10 commitments for ESG, of which 7 of them are in sustainability. That does include being carbon neutral by 2040. That does include being 100% savings in energy usage by 2030, which is RE100. 100% for EP100 as well by 2030, with milestones in 2025 and 2026, because I've always believed it's easy for CEOs to come in and set targets for 2030 and 2040. We won't be there, so someone else is going to hold the bag at that point in time. So what we're looking at is what are the targets for this year, next year, and the year after that, that put us on that path. So these are all the activities that we are driving today to play that role that corporates need to, because this is not something done by governments alone. Corporates have to play a role in this.
So that's so what you're saying is it's quite clear that regulations obviously is one thing, but do you feel that at the end of the day, corporates have to set voluntary targets, and you've already done that, and also abide by them? Like you had said, carbon neutral by 2040, let's say increasing sustainable energy by 100%. So do you think that is something which is really now the responsibility that voluntary targets have to be kind of set and adhered to?
It is a responsibility, and it's not just targets, because that itself is not going to be enough. The technology that exists today will not allow us to be carbon neutral by 2040 or 2050 across the world. It will get us only 50% there. So we need to invest in new technologies to be able to get there. And it's also about the materials that we buy for our automobiles or tractors or other things we produce. If we continue with steel as it is bought today, we're not going to be carbon neutral. So we've actually joined up with a group of global companies as part of a First Movers Coalition that looks at supply chains and how do we make supply chains green. So how do we work with companies to get to green steel? What percentage of our procurement do we commit to being green, and again set specific targets for that every year? So there's a whole host of things beyond pure emissions. Emissions is a small fraction of the game, but everything else has to come together to make this work.
Mr. Shah, to going towards this journey, as you've said, technologies will come. But I just want to touch upon talking about technologies which are generally right now costly. And each country has kind of carved its own path towards reducing carbon emissions. But just looking at India, frankly, cost is an issue. If you look at, I'm not saying GDP growth, but per capita income compared to more Western, richer countries, they can afford, let's say, greener, cleaner technologies. Do you think that is a challenge? And, but you did say at one point it long term can be profitable. So just this whole balance, especially in countries like India, where the whole balance between cost and cleanup technology, which has to be balanced. I mean, we are seeing it even in the automotive space, which we'll come to later. Do you think this is a big challenge, and how do we kind of overcome this?
You're right, Hormazd. That clearly is a challenge, and it's one that can be overcome in partnership with the government. The positive aspect we are seeing right now is our government has committed to very stringent goals on this front. 50% renewable energy, for example, by 2030. That will make a huge difference. On the solar side, we are competitive across the world. So from a cost standpoint, solar energy is actually produced at a lower cost today than thermal energy. And therefore, this will make a difference. So it's a combination of government incentives starting in industry, the industry then taking over and driving to lower cost, and scale driving productivity.
And just moving towards electrification, clearly that's been the theme of today's conference. A lot of new ideas, a lot of excitement, a lot of passion on electric mobility. But the question is, just the pace of electrification in India. It's still a small base, obviously. In percentage terms, it's very high, but that's the base effect. But do you think the pace of electrification, has it surprised you? Is it moving faster than you thought? Do you think we still have a lot to do to catch up with other mature markets? And just your thoughts, even from the consumer standpoint, as to where we are headed here.
It is moving faster than we thought. And there's one reality that in India, car ownership is a much lower fraction as compared to what it is in the US. And therefore, it is difficult for governments to provide incentives for buying cars. That is a reality that we face. And we have to operate within that reality, but even within that, what we have seen is a rapid adoption of electric where three criteria are met. And the three criteria are cost of ownership at parity. The second one is range anxiety being addressed. And the third is infrastructure for charging. And we see that today in three-wheelers. So we've had a three-wheeler portfolio that it was essentially an ICE portfolio. A year ago, we hit 25% penetration of electric. And in the last quarter, we've hit 70% penetration of electric. So we're starting to see that movement in three-wheelers happen very rapidly. We're all seeing the movement in two-wheelers as well. So two and three-wheelers are easier because cost parity has been achieved. We are seeing range anxiety being addressed, and infrastructure is not an issue because battery swapping is very easy. For four-wheelers, it will take longer. And therefore, for four-wheelers, we expect that inflection point to come in sometime between the 25 to 27 time frame. Because it will take that time to build the infrastructure, to get the cars on the road, and to essentially have born electric platforms. Because ICE-derived cars are a bridge to being born electric. But the born electric platforms are the ones that are really going to help take it forward.
And just talking about three-wheelers, as you said, that's one area that will grow rapidly. Is it largely driven by the fact that, by economics, the fact that, today it is cheaper to run an electric three-wheeler than an ICE three-wheeler? Is that really the main driving factor? Probably would be because, at the commercial sense, it's all down to profitability, running costs, that sort of thing.
It clearly is. That's why the cost of ownership is really the total cost of ownership, not just what you pay for it up front, but the economics of running it. So you're absolutely right.
Right. And, you talked about born electric, the transition. How do, let's say, legacy companies deal with this transition? Because it's quite a challenge. Being honest, it's the IC engines which make the profits in a way to fund the future. Obviously, EV still from a bottom line perspective, still not quite there, but clearly that's the future. There are a lot of startups in a cash burn model, which is one way of, addressing or approaching this new trend and this new future. Is this also one of the difficulties, transitioning from ICs, which, make a lot of business sense still, because all the investments are already done. It's a technology everyone is comfortable with, but clearly knowing that they will eventually end up in a museum, and you have to look at a future. What is the way forward? And we have seen certain companies, legacy companies, also spinning off EV divisions as a way to attract capital, private equity. That's one way of doing it. I'd be interested to know, let's say, legacy companies, you've been around since going to be 75 years. How do you kind of cope with this new kind of, environment?
So Hormazd, I'd agree with you first that IC engines are a cash generator and are here to stay for a long time. Even if you look at EV penetration of 50% in 2030, we will still sell as many cars in 2030 as we sell today that are ICE engine cars. So therefore, as a legacy company, we cannot take our eye off that ball. In many ways, it's easier for us at Mahindra because we've just recently had a series of new launches with brand new models in ICE. We've had 4 of them already, the 5th one's coming up in the next few months. And that positions us very well because these new models will need refreshes over the years, but it doesn't require a brand new model that needs to come out. We are, at this point, possibly the best position across auto companies around the world because of just timing. If this revolution had started 3 years ago, we'd have to put a lot more into ICE, but we've done all our ICE investments. So for us, our investments really are more towards the EV side. And that in some ways also makes it easier for us as to not have to attract a lot more capital for it because we're taking some of our investments and essentially moving them to EV. But if there is a good case for spinning off, we're always open to looking at those options. So we're not going to take any options off the table. At this point, what we are focused on is really developing born electric platforms. And we have a series of those platforms. You'll hear more about that in July in terms of what those platforms are, the designs around that and everything else. But there's a very exciting journey for us in electric ahead.
So I think, it's quite clear that, unlike Europe, where it's sort of zero-sum game, that it's a one-to-one swap between ICE and EVs. So, for every ICE that doesn't sell or for every EV that sells, one ICE vehicle doesn't sell. In India, clearly both are growing. So I just wanted to get your sense on what is your forecast, let's say by 2030. Do you have any numbers as to, obviously the ICE market will still be a large proportion, but I'm sure EVs, would be a substantial percentage as well. You talked about around 25 to 27 being the inflection point. But I just want to know, your thoughts on, where we would be at the end of the decade, because we've seen electrification rapidly gaining pace. Do you think with certain breakthrough technologies, which we don't, have the luxury of really predicting what's going to come out, that this, we could really be much, much faster in this regard? Yeah.
Our view right now is that by 2030, 50% of cars sold will be electric. Now that may go faster if we can get to cost of parity faster and infrastructure. Those are the two main drivers. Cost of parity is going to be easier based on what we see right now. Infrastructure will take some time. So with that, we should be able to hit 50% by 2030. I would not be surprised if it's more than 50, based on the pace we're looking at right now.
No, that's interesting. So let's say, our general forecast is we'd be a 7 million market by 2030. So what you're saying is as much as 3.5 million could be EVs. But, follow up to that is the supply chain. Where do you see we are over there? Because I think that really is a lot to be done in that respect. The supply chain is still very underdeveloped for the EV space. Even battery technology, battery manufacturing down to the cell level. Do you think this could be a bit of a hurdle, maybe at least in the short term, even if the demand and market exists? Because it does take time to ramp up. You need scale. Very often some of the product lines, because of the prices, are subscale. So very difficult to invest in localization. Do you see some of these challenges as being kind of hindrances or slight hurdles going forward to kind of slow the pace, of change?
So the way we see this, Hormazd, is we would look at a 20% penetration somewhere between 25 and 27, which depends on infrastructure, which depends on supply chain being developed, etc. And then it's starting to ramp up as we hit the inflection point there. So once we hit the inflection point, it will be much easier for supply chains to ramp up. A number of suppliers are preparing for that already. There are a number around the world who have essentially said we're going to invest a lot less in ICE going forward and put our investments in electric. Battery technology is the biggest factor. And not just batteries, but also the raw materials behind the batteries. Safety of batteries becomes a big factor as well. So all of those things will require some time to play out. And which is again the reason why I would say 50% by 2030 and not 50% by 27 or 28. Because we need those factors to play out and then get into developing the EV market after that.
No, I think, that is the one concern is battery, raw material, geopolitical issues in sourcing those raw materials. That's really the biggest concern. But do you think that's where, let's say, OEMs need to step in? I mean, do you think OEMs sometimes need to be more vertically integrated rather than outsourcing in maybe key technologies like, especially the cells, because that really is the secret sauce of an EV today?
Battery technology is moving very rapidly. We've had some of our leaders spend time at MIT every year looking at new technologies that come in. And I've been there for the last 8 years. And every year we would look at the latest in battery technology. And often by the next year, that had disappeared and something else had come in. And we are still in that phase right now. NMCs in battery was the latest new technology. But today when we look at it, we find there are newer technologies in that as well. Solid state is the next one around the corner. So we are waiting for technology to stabilize a bit before we would look at greater investments in that. It's still an open question whether OEMs need to invest in that directly or whether they need to partner with others to invest in it. Because in many ways, it will become a commodity in future. If you look at the solar industry, it has gone through a similar cycle. Solar panel technology was evolving very rapidly in the early stages. And for the first few years, it was very difficult to get solar panels. Today, solar panels are a commodity. And therefore, batteries will be a commodity at some point in future. but we'll have to go through this initial phase of technology.
No, I think that's quite interesting. And, I just wanted to press you a bit on that, on the battery side of it. A couple of things. Yes, clearly, I think battery technology is evolving. As you said, NMCs, now maybe for India, LFP, and people are looking at solid state. So clearly, parking your investment is quite risky right now because the technology might change and make that investment redundant. So clearly, partnerships with battery makers, which a lot of OEMs are already doing, SAIC with the CATL, for example. But the real question is, going forward, if you say that all these technologies are going to be commoditized, where does that leave the OEM? Because today, the OEM controls really some core elements of a car, which is design, and to be honest, even the IC engine. I mean, I go on record to say that today M&M's IC engines are amongst the best in the market. And that's really, given the vehicles a certain character. But when things get commoditized, where does that leave the OEM in terms of differentiation to try and make, a mark with the consumer?
So first, thank you for the kind words. We would obviously agree with you on that point, but in terms of differentiation, it's the cells that will be commoditized. The mechanism for creating the battery, for leveraging the power from that battery, the powertrain that's behind it, the software that goes into the motors and the battery as well, all of that will be proprietary for the OEM. That combined with design is what will really differentiate one versus the other.
So basically, it's the software to a certain extent, and the battery management, and obviously the design. Design today has become make or break. But at the same time, do you feel that, I wouldn't say commoditized, but there's a certain one-dimensional aspect to EVs, just the way they drive and things like that. And, do you think more needs to be done? And, where does that leave, let's say, certain product lines like SUVs? Do they translate better to electrification, or would one need to look at smaller, more compact vehicles? So, obviously it's going to change a lot in the way people view these products. So, any thoughts on, the kind of trends we would see in terms of the way, let's say, products would emerge and evolve?
I'd have in some sense, a contrary view to that, because SUVs, as you have become very popular, and the growth in SUVs is far higher than other passenger vehicles. At the same time, there is a concern around SUVs with regard to higher emissions because they're larger cars. That in fact positions electric SUVs very well. And from a technology standpoint, electric is there for SUVs today. In fact, all our launches are going to be SUVs only. And they will be larger SUVs as well. We will also, as the next step, look at body on frame with electric on SUVs. So the ability to do that within the technology bounds of today is very much there. And we should be able to develop better cars than what we have today with electric in not too long a time frame.
And Anish, I know you've got a bit of a hard stop, but just a few more questions before I let you go. I want to look at EVs from a more holistic point of view. The impact of EVs on more than beyond just cleaning the air, because to be honest, you might be cleaning the air but polluting the earth, because recyclability of some of these components is a challenge. So that's one point, your thought on that. And also, let's say on, basically looking at it from a, more social point of view, whether jobs, for example, because clearly to manufacture EVs requires a lot less input or a lot less manufacturing input than a normal ICE vehicle. So that could have an impact on jobs, livelihoods, things like that. Also, the reskilling of ICE technicians to EVs, is that also a big challenge? So just overall, there's looking at it from a holistic point of view, there are certain issues which, sometimes are not addressed.
You're absolutely right. And that's part of a transition that we will have to work together to make sure that is done smoothly. Let's start with jobs. The jobs in the EV space will be very different. There will in fact be a lot more software related jobs as well, because as you see even today, cars really have become software.
But my question is, would it make a whole swath of jobs redundant in that sense? Because sometimes it's difficult to reskill from, let's say, something on the assembly line straight to software, if you get what I'm saying.
That's right, and those are some of the challenges we'll have to work together on. We do see the ability to reskill though, because if you look around us, we used to check in at airline counters and have a host of people checking us in. As we look at various airports around the world, you don't have those counters checking you in anymore. You have machines that check you in. And we've seen that with call centers, we've seen that with a host of other areas as well. So every industry as it develops will go through that transition. And the onus will be there on that industry to find a way to reskill its workforce to be able to handle that transition well. Otherwise, that could cause a lot more social issues. So that is something we will have to be careful of and do that in a way where we can handle that over time. As I said also, it's not going to be something that dramatically changes because the number of ICE cars that we will sell in 2030 is still going to be the same as the number of ICE cars we sell today. So from that perspective, this is not something that's going to change overnight to say, okay, you suddenly don't have anyone working in auto factories anymore.
That's interesting, but what you're saying is that certain investments in ICE will stop well before then, because this business is a long lead business. What you invested yesterday is good for another 10, 15 years. So if you invest something, it will have to pay off for another 10, 15 years. So clearly, let's say on the R&D side, there may be people having to switch from ICE to EVs, if I'm right in that.
Yes, in fact, a large part of our R&D teams are focused on EVs now. And that's part of that change that will start happening. So that's where the reskilling is happening. And our teams are very eager to do that because they see this as part of the future as well. So they do want to spend a lot more time. And if our associates are eager to do that, it makes that transition much easier.
Right. So I think clearly what you're saying is that, in a way, having future-proofed the IC powertrain, and future-proof meaning for future regulations, because that's really what the IC engine has to keep evolving with tougher regulations. Now, CAFE and RDE2, that's all done, dusted. Now the focus can be straight on EVs. But it's not the case with every OEM. I do know of some OEMs which are still having to invest in IC just so that they can serve a big market. And they have to meet the regulations to do that. Yeah.
That's right, and that's why I mentioned we were better positioned just having 5 new launches right now. But coming back to your point, Hormazd, on recycling, that is an important aspect. And this is one where we will have to have a robust industry. We have launched, or we have a business in auto recycling in partnership with the government, with MSTC. And that is one that we're looking at very positively in terms of a rapid takeoff, because it's not just about putting EVs on the road, it's also about ensuring we have recycling, not just for cars, for batteries, for other aspects as well, because that is an important aspect of how we protect the environment.
And Anish, just the last few questions. I just want your thoughts, being an industry leader on, are governments doing enough? Because sense one gets is that, governments really are very, very keen, very eager, but, there's also a cost involved. Understandably, that could be a bit of a hurdle. So are governments doing enough to kind of, in terms of SOPs, in terms of, whatever regulations to kind of accelerate the pace of electrification? And can something more be done? Yeah.
So on that, I would say unequivocally yes, because what we are seeing from the central government as well as the state governments is there's a huge push for electrification. The PLI schemes have been very positive overall. Besides that, the other incentives that states are offering, Maharashtra state in particular, is being very aggressive on EV, on seeking investments in the state. We've seen some of the other states do that as well. So from a government standpoint, I would say we have everything we need. It's about now implementing, it's creating and designing those cars, and then developing the infrastructure and putting it in place, and the supplier ecosystems and everything else.
And I think Maharashtra government has a vision to make this state the EV capital of the world. So, your kind of contribution to that, will all investments in EVs be done in this region? Is that something we can expect?
So Maharashtra is the largest state for us as an automaker, and it will continue to be. I don't see any change from that standpoint at all.
Great, Anish. And last question, your vision for electric mobility. Let me throw something to you, and I won't hold you to it because we may not be around. When will we see the last Mahindra IC engine being made? You can give a wild guess. I won't hold you to it.
At this point, the rational side in me would say 2040. But what we've often seen of revolutions like this is there's a certain inflection point where things change dramatically. I still vividly remember a set of photographs that I had seen in a business school classroom many years ago, where one photograph was Fifth Avenue on New York that had horse carriages with one car. And the second photograph was all cars with one horse carriage. And the difference between that was 10 years.
Well, on that note, thanks very much. I think all of us have appreciated your thoughts and the kind of vision and really the clarity of thought. And I think like everyone, everyone's on this journey of electrification. It's not a question of, if, it's obviously a question of when, how fast, when we get there. Anybody's guess. I think you've also put a date out there. So, I think it's exciting. I think all of us are on this kind of unstoppable journey. And with that, I'd like to just hand it back, to the organizers. Thank you very much, Mr. Shah.
Thank you.